Okay, Robert, we are anticipating the next announcement of the Bank of Canada. Will interest rates continue to rise after this pause? Or do you think we're okay and they won't rise the rates any longer?
Let's say that the Bank of Canada was totally independent of government and was truly data driven and was looking ahead and not behind. Then we'd say no more rates. But since they're not, they're going to raise it again. Not this time, but next time.
And on this episode of Real Estate Chat with
John de Perez.
and Robert Eade, we're going to be talking about this vicious cycle that's been created and why perhaps there is no end in sight on this, or perhaps somebody will actually figure it out and they'll read Robert's textbook on why there shouldn't be any more rate hikes. Or maybe they should. Who knows? Robert shared this chart with me, and this talks about the cumulative. Did I pronounce it properly?
Pretty close. Starts with a C, ends with an E. Cumulative.
Cumulative. My English is not my first language. Thank you for correcting that. Cumulative. So take us through this chart, Robert.
Well, if you start with 100 in 2020 and you go to the Bank of Canada inflation calculator, it tells you that the same basket of goods that cost you $100 in 2020 costs you $115.84 today. So what it means is, they've now included this on the inflation calculator, is that inflation is the same thing as a devaluation, a decline in the purchasing power of your money. Oh my, where did it go? The money is not as valuable as it was. So all of the unionized government monopolies, union contracts come up and they say, we got to have a cost of living allowance at least. If you're given that much in inflation, and we got to have that as a minimum. Plus, we were very good during the COVID, so we got to catch up. And the auto workers, they think they got the people over the barrel. So they say, we got to get 41%. We got to get, it just never stops, this wage price spiral. Look back to the other Trudeau when he had this wage and price spiral, stagflation. These things you haven't heard about maybe your whole lifetime. That what he finally did was clamp down with something called 6 and 5, even though he denounced that during the election that he won, when Bob Stanfield came up and said, what we're going to do is put on price controls and wage controls. You can't increase it anymore than that. Now, this is government intervention. This is not something I recommend, but this is sometimes they pull a rabbit out of their hat and say, this is what we're going to do, because they got to do something. Because if inflation can never go back to 2%, but you cannot, they got to do something to change people's minds about it possibly being back at 2%. Now, 2% means that prices go up by 25% every about 11 years, compound. And it means prices go up. Now, inflation is good for real estate in that it means that it's a tangible asset. It never changes. So if you have to put more money into it to buy the same thing, it means the value has gone up. So appreciation over 25 years, over 15 years is one of the things that we hold out as a hallmark of real estate. It's always getting closer to downtown, and they're not making any more of it. And it costs more to develop it every day, and it costs more to build it. And so buy something that you can afford and hang on to it and look at it again in 10 years. Anyway, so that's enough of that.
Well, it's a vote of confidence, right? So if you believe in where you live, if you believe in Ontario, in Toronto, in wherever city you're in, and you buy real estate there, it's under the belief that it will continue, like these principles will continue. Hedge against inflation.
That's right. And it's a tangible asset that you can live in. Like, you need to live somewhere. So instead of buying a pile of gold, which you cannot live in, instead of buying a mutual fund, or this is what they used to say, you can't live in a mutual fund. Instead of buying something you can't live in, this provides utility to you, or you can rent it out. And so that rental value, it has value today as well as in the future.
And that's the reason why when speculators were voraciously gobbling up inventory when money became cheap for a relatively short period of time and then became expensive again. But one of the interesting things, Robert, that we're going to be talking about today is why is this inflation sitting at its current number? Because isn't it ironic that, I don't know if ironic is the right word for it. Again, English is not my first language, but isn't it interesting that one of the measures of these inflationary numbers is the cost of housing? And by virtue of rates going up, the cost of housing is going up. And doesn't that create this perpetual cycle?
Well, this might be a time to talk about this. It's a sort of a four-pronged article that came out in the Financial Post from a fellow named Peter Hodson, who I do not know, who makes mention of his firm, 5i Research, in the course of the article. And he talks about how the Bank of Canada could cure inflation. Now, I'm going to point out one little flaw in his argument when we go through it, but this is stimulating thinking that if the Bank of Canada, by raising interest costs by 30% for the average person, now again, we talk about the average person all the time, what if we dropped interest costs by 1.5% over the next 6 months? He says 4%, from 4% to 2.5%. That's his yields on his 5-year, not the interest rate that people are actually paying. The shelter component of the CPI bundle of goods will go down to the target. Somebody's projecting is the target that he says he wants to achieve at 2%. Now, this is playing with numbers, but it's an interesting concept that if the biggest change in a person's budget has been the increase in the carrying cost of their mortgage because their variable rate mortgage changed the purchase or the principal and interest payment that they made, then yeah, that's a shelter cost. And the person who was kicked out of a rental and they can't find another one because it's too expensive has gone to farther away to find something for, find something for $3,000, find something for $4,000. It's quite expensive to find a rental right now in a good, super good location. So it's a mess. It's a mess.
Well, I mean, again, this is a big component of it. And as you said, playing with numbers. So if you remove the number from it, then yeah, you're manipulating these numbers and it makes you see things the way you want to see it, I guess. But at the same time here, Bank of Canada mulled rate hike in face of stubborn inflation. Another article a few days ago, basically with these policy setting meetings, and they talked about, first of all, the pause. We'll link to all of these articles, so don't worry, you won't miss out. The pause and then subsequent multiple rate hikes, and then another pause, and then oops, you know what? Inflation is getting out of hand again. But mind you, the reason for that inflation again goes back to that housing costs and interest being a key part of this. So the discussion becomes, and you real estate chatters are fantastic at this because in the comments, make sure you comment on this one as well. You chime in on, will prices go up? Will prices go down? Will rates go up? Will rates go down? And there's a certain belief by some of our viewers that rates won't drop anytime in the near future. In fact, they may go up. But by rates going up, this inflation is not going to go down because those rates are contributing to the cost of the mortgage interest that's getting paid, the housing, amongst other things. So, Robert, again, we go back to that same question. October, I guess it's 26. I probably don't have the exact date right, but it's last week of October when the next announcement will come. That's not too far from that. What happens if the rates go up again?
Well, it's not going to go then, but it's going to go the next time. Because as the article which points out that the Bank of Canada is now publishing, belatedly, but publishing, a summary of the meetings, the notes of the minutes of the meeting, that their deliberations of whether. So it's not unanimous. Some people wonder. So it's a way of saying we were thinking about this and it wasn't unanimous because there's sometimes unintended consequences to any decision you make, which is quite true. So it's a good news story. The Bank of Canada is copying the Fed and they're putting out the deliberations in writing a little while later. So what happens if rates go up? When rates go up, then everybody feels more bad. They feel more hesitant. They feel less confident. They do more nothing. So if they do more nothing, then, if you do nothing for 2 years, then the rate of inflation will go down because people aren't going to buy stuff except for what's absolutely essential, are going to figure out a way to not move or not buy extras or grow groceries and grow, vegetable in the backyard. I don't know what they're going to do, but they're going to find ways of paring their budget, or they'll be asking for wage increases. And you ask for wage increases, then that has to get transmitted into the price of the goods that being produced by the company that's giving the new wages. So it's the spiral, wage and price spiral. It's stagflation. It's look out. We've seen it before. So we get the housing part of it. And we're going to have to solve the housing part of it ourselves, the resale housing part of it ourselves as buyers and sellers. And I've said it a million times, and now you're going to finally sink in. Creative financing means working out a deal so you pay less than the current rate on the mortgage that you need between you, the buyer, and you, the seller. And you maintain a little bit higher price by doing it because the savings are in the buyer's monthly payment.
Mm-hmm.
Well, I'm starting and stopping. John, what do you think about that?
Well, I think that's interesting. I think that we're going to cover that in a future episode of Real Estate Chat. So make sure you subscribe so you don't miss the creative financing episode. Now, Robert, one more article you shared with me, our friend Benjamin Tal, who I hear may eventually subscribe to our channel and listen to what we have to say. Bank of Canada's high interest rates are worsening inflation. So again, this goes back to that same message that's going back and forth, that the Bank of Canada should have stopped its overnight interest rate increases at 4.5%, wishful thinking at this point, instead of 5% in its effort to fight inflation. So again, we're going to link to this article as well. And of course, the influence Bank of Canada has on making these things happen. So Robert, why don't we conclude, I guess, with final thoughts on, I guess this is a very difficult question to answer, or different. Even coming up with a conclusion for this is quite challenging because the Bank of Canada certainly hasn't gotten it figured out either. But we're thinking of it from the perspective of our Real Estate Chat viewers who are either in the market right now, who own a place and are, wondering, what's my next move, or are thinking of investing or continuing to rent, or altogether hate real estate. Sometimes, why wouldn't you hate real estate with all the frustrating things going on? But what's the advice, I guess, to our Real Estate Chat viewers amidst all this?
Okay, well, first to Mr. Tal. Mr. Tal comes to the real estate board regularly, annual meeting, has a 45-minute talk with slides, and he goes here and he goes here. He says the Bank of Canada always overshoots on the way up and overshoots on the way down. So we have seen this borne out to be true. Now, Mr. R. Tiffany Macklem is no different than any of the other political hacks that have been put in this job, that are supposed to be wise and managers of the economy, and the government thinks they're managers of the economy. Here's the news: you cannot manage the economy centrally. That's communism. You cannot do it. It fails every time. And that's why Mr. Tal says you overshoot, you go too far, because they look for data, but they look at old data and they make decisions based on old data. When finally they come to the place where they see that they've got wage and price spiral like they had before, they'll say, oh, what was the solution they came with then? Oh, raised interest rates like crazy. Oh, they're doing that now. But they found that went too far. So we got to undo that. So that's what they're doing. They're just fiddling around, looking at the books and saying, what'll we do? And then coming up with something in consensus, of course. And they're making a muddle and a mess. Just like Rob Ford when he said, I'm going to do this. Oh, now it was a mistake to do that. Okay, now I'm going to do the opposite. But it's not my fault.
Well, there you have it, Real Estate Chat viewers. Leave into the comments what you think about this and give us your predictions. You know what? I know it's a bit far off before that happens. Let's hear from you again. Rate hikes up, rate hikes down, rate hike pause for the next announcement. Make sure you like this episode if you like what we had to say, and share this with your friends and family and loved ones. Thanks for watching this episode of Real Estate Chat. Take care and bye for now.
Especially your loved ones.